Hello traders, welcome to today's video. It is Wednesday the 20th of September and this is your Bitcoin price update. Once again, no me on screen today because I am still a sick person, but all is good. I will continue to provide as much content as I can. So I wanted to just have a recap, a little refresh today on the higher time frames just to make you guys aware of where we are at. So the relationship of those 50 and 200 moving averages is still quite interesting to me at the moment. So you can see on the monthly time frame here, still riding that 50 monthly EMA, which is what it basically had done on the previous bear market. Okay, so we're above there, holding it as support after spending a few months underneath it. Now going on to the weekly time frame, okay, keeping it very simple with a couple of trend lines, some little lines on the chart and the moving averages again. We can see here we have both the 50 and the 200 moving average acting as support here. So this is 1, 2, 3, 4, 5 weeks there on that 200 EMA moving average acting as support before getting the bounce that we have seen so far towards the end of last week and so far this week. Now we have to be aware that there are a couple of levels on the chart that we have been watching quite clearly on here, which is taking out these lows, which on perpetuals have been taken, but spot price has not yet taken the lows. This has also been taken on the CME chart. So I would consider this on the majority of exchanges to have swept these lows, and that is why we are seeing this bounce at the moment. Going on to the daily time frame. Similarities between what we had previously, okay, with quite a heavy move down, some consolidation, a deviation that brings you back up towards the range, and then looking at a break. Are we looking at something similar here where we've got this, whoopsie, just general move down, consolidation, deviation at the lows, move back up towards the top of the range. And if we can start to break through this trend line, if we can get an impulse today or tomorrow maybe, has to really be in the next few days. If we can get a further impulse higher, then that would, for myself, lead to higher prices looking to take out the series of poor highs that we have just above 30k over here. We did yesterday for that first time get that close above these EMAs, which is interesting. We're now getting that open close potentially above these, which could, if this is to be pushing higher, avoid the death cross that many of the slightly less educated traders may be closely looking out for some trade ideas. Not that you can trade off of this stuff, but it is generally a decent just to look at, to know where we are within a cycle, whether there is strength, whether there is weakness, because you will get actions being taken based off of where these moving averages are, and they are an average. So it is good to see how the average price is basically performing. Now, if we go down here, let's just go off of the spot chart and move it over onto the perpetuals, and we'll come into this range here. So keeping on with the moving averages, we do have the potential for a crossover from the 200 and the 50 again today. That is not where our daily open is. Let me just move this over to here, which is like right at that monthly level. And then we have the previous day open. Whoops. Oh my God, come on. There we go, copy. Previous day open, which we'll label as a daily level just there. So, I mean, can probably remove that monthly from the chart right now, but this daily open, quite a important on the macro, because we're right in that 27,200 zone where we have that monthly level, where we have this order block, where we have the fibs lining up for something that could potentially even turn into a harmonic or something here. If you're looking at something like this, probably a little bit too deep, or then moving it this way and finding some harmonic targets that could take you down into those 25, 500 areas on here. Now, reminder that there is FOMC today. So that will be at 7 p.m. UK, 6 p.m. UTC, around about lunchtime for you guys in America. And there is the chance that that could cause an impulse in one direction or another. I would have been live streaming this, but I think probably better I don't today. My brain's not really particularly active at the moment. So yeah, unfortunately, no live stream today, but I will get back to those as soon as I possibly can. Just going over basically some of the simple stuff today, because that is what I feel I can properly concentrate on. Yeah, so that really is like that. Those are the higher time frames, giving you an idea as to where we are. Now, if we look on the 4-hour here, we are building these bearish divergences. So you can see high, and on the RSI making the lower highs. On the daily, it is the same. Okay, so a few highs being put in, lower highs on here. And on the daily, interestingly enough, we had that bullish divergence at the low, right, between here and here. And now we are forming those hidden bearish divergences up at the highs. So something else maybe to pay attention to. If we look at our fixed range, it's quite narrow here, so we're way outside of the value area right now. Our point of control comes in around that $26,000 mark, which is roughly the EQ of this range as well, so it's the midpoint. And if we are to draw our fibs, then we do end up getting, I mean, that's around about the 0.5, a little bit higher there. But if we are to come back down to the value area low, which is probably more so what I would be looking for if this does start to drop, then those Fibonacci levels are lining up within this big gap that we formed on that initial impulse up to recover the deviation that we had on the 11th and 12th of September. So yeah, not too much more to add here. Thank you for watching. Please do like and subscribe if you have not done so already. Comment below, let me know your thoughts, and I will see you all in the next video. Cheers, bye-bye.